Good afternoon. Hey Ted, how are you doing? Okay, everything's up, everything's running. Okay, seems like everything's up and running, doing well. Hope you're all okay. Put it into the chat and let me know if... Now my LinkedIn doesn't want to stream. That's odd. If you can see me okay, hear me all right, put it into the chat, let me know. Hey Moss, good morning. Hey Booba. Hey Nicola. Hey Ayakame, good to see you. Hey Mala. Where's NJ? Mala? Where's NJ? Hey KLE. Welcome to the group, Mala. You're new, so welcome to the group. Good to have you with us. Hey Jacob from Nigeria. Good to see a lot of new names as well. So welcome for everyone who is joining us for the first time. New year, new members. New Jersey. Good to have you with us, Mala. Hey Angel Case. Angel Case has switched over from TradingView to YouTube. How are you doing? Give it a minute before we get started. And for everyone else who's on TradingView, LinkedIn, TikTok, YouTube, Twitch, wherever we're streaming it on, do help me out. Click that like and subscribe button. That would help massively. Thank you all for joining me on this daily market analysis. It is the 4th of January. Hope you've been trading well. Again, the link is there for you for the Discord channel. If you haven't already, do make sure you join us on Discord. We'd love to see you there. That's where you can take the discussions beyond this 1 hour session into Discord through the day, where we have members from all around the world supporting you with your trading journey. Hey Christina, how are you doing? Good to see you in the new year too. Alrighty, let's get started. So again, thank you all for joining me on this session. If you are new to the session, a number of you have already said that. Do let me know where you're joining us from. Would love to find out. And do join the Discord channel. The link is there for you. It's absolutely free to join. If you have any questions at any point in time, please feel free to put it into the chat and let me know. Any particular pairs you'd like me to look at, put it into the chat and let me know as well. Okay, and for all the regulars, thank you for joining me. Good to have you with us again. A quick disclaimer before we get started. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence, as the contents of this webinar are not intended to be a recommendation to trade a financial product, as your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. With that, let's move on. Hey VXP, hey Ray, hey Jockey, good to see you all with us. Do help me out, click that like and subscribe button on YouTube already if you haven't already. Okay, so we're on Forex Factory here. Just a quick review of what happened last night. We did see the US ISM manufacturing PMI numbers released pretty much as expected at 47.4. It was expected 47.2. No big surprise there. JOLTS jobs openings at 8.79 million. Expected 8.84 million. Again, not a big surprise there. Right? The previous was revised upwards from 8.73 to 8.85. Didn't do too much in terms of affecting the dollar index, because we did see the dollar index continue pushing to the upside at 11. I'll zoom in a little bit. Let me do that. Okay, let me do that. At 11 on this candle here, we saw it push down a little bit and then continue to close higher, right? That was because of the news. We were, like I was telling you yesterday, I was actually expecting a little bit of a more positive number, but coming out as expected, better as expected than if it was worse, right? So that's why we saw the dollar push down a little bit before pushing back up. But the main feature was early this morning, 3 a.m. GMT plus 8, we saw the US FOMC meeting minutes released. Okay, it was a long document. Look at that. All right, it was a long document. At 3 a.m., you wouldn't be reading this at 3 a.m. Most of you are in the other part of the world or the other half of the world, so it's a reasonable time for you. But for me at 3 a.m., I kind of skipped through all that and I just come down to where was it? This last part. Okay, this last part, identifying the committee policy actions. What we saw from here didn't surprise me too much, but it did have a little bit more of a dovish tone, right? Why so? Is because they talked a bit more about possibly, there was a line here, let me see, there we go. Right, they modified the sentence in their meeting statements, right, to change the extent of any additional policy firming that may be appropriate to return 2%. They view that any to this sentence may be as appropriately relaying their judgment to the target range for the Fed funds rate was likely now at or near its peak for this policy tightening cycle, right? So that again, while leaving open a possibility for further increases. So this again comes to the point, signaling that hey, the Feds are at or near its peak in terms of its current rates. We're looking at January's meeting going to hold on the current rates and checking the CME 2, Fed Watch 2. You can see here that when it loads up, it was just 1 day ago, it was at 87.6% at this, holding at the current level, now at 91.2% holding at the current level. All right, so we saw that as, hey, Feds are not likely to, or even less likely to cut rates in the coming meeting, dropping from 12.4% to 8.8%. More likely going to hold rates at the current level. But in March, we're looking at the current rate at 27.4%. So very unlikely, or a little bit more unlikely, that you're going to hold rates with a 66% chance of it cutting and a 6.1% chance of it cutting even more than expected. Okay, and then into May, you see that we're pretty much 96.1% chance of a rate cut. So because of that, more, identifying that the Feds or signaling from the Feds that they are near the peak, at or near the peak level, led to, at 3 a.m., you saw the dollar index test that trend line and then starting to push back down. That's what we have been looking for. Yesterday, day before, we were saying that it's going to push up. Yesterday, we said it's going to push up to around this level, trend line and resistance level. Going to hold it. It needs to stay below 103 to maintain the bearish bias. I think that's what's happening right now. Take that away. It's tested that trend line. I'll show you trend line again. That long-term trend line, we can take that one away. All right, that long-term trend line holding prices now pushing back down again. So I'm possibly anticipating a that downside to begin on the dollar index. Likely to begin on the dollar index. But not yet, because we do, maybe not yet or entirely to resume that big downward push, because we are also looking at a couple of number of news releases to come today and also tomorrow. So with that, that was what happened at 3 a.m. this morning. All day we have the Euro-German preliminary CPI number. I don't think these are going to move prices too much, even with the final services PMI number from the Eurozone from the UK, 48.1 to 48.1, 52.7 to 52.7. It looks like we're not going to get any major surprises here from the Euro or from the UK in terms of the services PMI. What I'm focusing on, or what I'm going to pay a bit more attention to, and what you should pay a bit more attention to as well, is at 9:15 p.m. GMT plus 8, we will have the US ADP non-farm employment change number. I say this every month, almost every month I say this. The ADP non-farm employment change number is a private calculation of the non-farm employment change data. It's weekly, very weekly correlated to the non-farm employment change number that is released on Friday. So don't think of looking at the ADP and then thinking, oh, it's a good number, non-farm is going to be a good number. It's not always the case, but it does have, when that's released at 9:15 p.m. tonight, it is likely to bring about some increased volatility, liquidity and volatility to the markets. Okay, it was 103, and you see that it was actually slowing down since December at from 106 to 103. Right now 103, looking like a push towards 120k. What do you all think? Put it into the chat. Let me know, what do you think ADP is going to be? Don't put in a number. You don't have to put in a number. Just put it in. Do you think it's going to be better than 120, or do you think it's going to be worse than 103? Better than 120 or worse than 103? Put it into the chat. Let me know. Let's get this a little bit more interactive. I want to see what you think. And while I'm waiting for you to do that, good morning, Goju. How are you doing? Hope you're well. And Pips Apprentice, how are you doing? Hope you're well. So looking for you to put in your analysis or your guess, your best guess. What do you think it's going to be? Via XP says worse, I think. So worse than 103. Moss says better. Nicola says better. Ayakame says better. So hey, it looks like a lot of you are, well, based on this small sample size, more of you are thinking that it's going to be better. Moss says more jobs due to holiday season. Bernard says lower. Hi Bernard, how are you doing? Right, what I think is that we might actually see it be a little bit more, my view, I think it's going to be a little bit better, like what Moss says. The holiday season, November, December period, with the festive, we typically see a little bit of a upward tick in employment numbers. So I wouldn't be too surprised if this is a little bit better than 120. However, I don't think it will reflect on the charts. Okay, it might be 120, it might be a bit better. I'm still looking for the dollar index to push down. It looks like we might have found that limit on the upside there. So I'm still looking for it to push down. I would not be surprised if it's better, but I would prefer to see a worse number. Does that make sense? I wouldn't be surprised if it's better than 120k, but I would like to see it worse, just so that we get the data that is worse. We're going to see the dollar push down. It's going to give us better confluence in terms of data and the price action pushing to the downside would make trading a lot easier in that sense. Okay, so we'll keep it a bit open here. Might be a bit over 120, but I would still like to see maybe about 90k number, right? So we saw October doing 180, expected 154, came out 89. Again, not highly correlated, but wouldn't be surprised if we see a lower number as well. So I'm keeping it open there. Generally, I'm still looking for the downside on the dollar index. Unemployment claims here from the US. This is a weekly number, so I don't expect this to move prices too much. 218 to 217, not going to surprise markets entirely. Okay, so the main thing here is tonight, 9:15 p.m. GMT plus 8, we have the ADP, non-farm employment change number, 103 to 120. Might see a higher number, but I'm still looking for that downside on the dollar index. And then I'll tell you more about the non-farm employment change and Canadian employment change numbers tomorrow. Okay, so with that, we're going to look at the charts now. Where's Jamil? Jamil typically comes in a little bit later, I think. So just hang on to that. Okay, so now looking at the dollar index here, went up, did not get as high as 102.90. It got to 102.70. So 90 was about there. Hit that limit there and then started pushing down. Right now, what I'm watching is this 23.6 level. Okay, and this area, actually, I would highlight that area there and say that area there. Okay, today is the 4th of Jan. I would be looking for the dollar to push down past 102.25 and 102. Okay, so it needs to break below 102 before we would see further downside on the dollar. I don't think it's ready for that big move down. I think 102, below 102, we could see it get to 102, about 102.65. I'll do that. Okay, so let's clean that chart up a little bit. I think if it breaks past 23.6, we could see it test down to this level. I would still say that dollar index needs to stay below 103 to maintain a bearish bias. Below 102 could trade down to 101.65. There we go. Okay, so what I mean here is that, you know, we might still see the dollar push back up a little bit. It still needs to stay below 103 to 103 being right there to maintain its bearish bias, but I'm still looking for it to go below 102, break below 102 to trade down to 101.65, which is about there. Okay, so I'm looking for that weakness to come back into play for the dollar index. So looking at dollar weakness to come back in. With that said, then looking at the Kiwi, it pushed down, did not go all the way to our take profit, bounced at about that point there. So you would have seen a small profit of about 20 pips before it went back up. Would have hit your stop loss if you did not close out on that trade. We can take these away now. And I would keep that there. So identifying that level. And now the Kiwi is at 0.6279, 0.6280. Now checking this level, it's coming back to that 50. Okay, oops, what happened here? Okay, put that in. It's breaking, it looks like it's breaking above 38.2, anticipating that dollar weakness to push down. We should be looking for this to push back up. I would say that this being a resistance, and you see we have 0.63 there as a nice round number, comes close to that 50% point. So if I had that 6295, right, what we would be looking for is for the Kiwi dollar to break past that resistance towards that previous high. We have a resistance. This was back there. I would change this and catch this point first. Okay, so that's my near-term resistance level at 6367. Kiwi dollar pushing up. What needs to happen is it needs to break above that resistance. So 0.63. Stop loss about no more than 20 pips. Take profit. You can go up to a 60 pip, 65 pip move to the upside. Right? It's not ready right now. You have to wait for it. Break above 38.2. And then above that 50, then we'll get in for 20 pip stop, 65 pip take to the upside. There we go. So I'll be looking for that. Buy 0.63, stop loss, was it 0.63? Yeah, 0.63, stop loss 20, take profit 65. Take profit 65, there we go. Okay, I'm happy with that. Check this. See why, that's one reason why it's retracing a little bit right now, is because it was way outside, not way outside, but was slightly outside of the Bollinger. So we see it coming back in, and then now looking like it's going to maybe sit there a little bit, but we're looking for it to gradually climb higher. Uber is asking why the spike on dollar index did not reflect on euro or other pairs. It did. You mean that? You mean this push up? Euro dollar did. We did see that push down, so that did come around. Okay, but we'll get to that shortly. So Kiwi dollar, that's done. We see that pushing past. We're looking for it to push past the resistance. 20 to 65, I'm happy with that. Then looking at the Aussie, I actually had someone tell me that they got into the Aussie, pushed down, got out at about that point, now pushing back up. That trade did not trigger, did not really close strongly below where we thought it was going to. So take that away, now pushing back up again. Okay, pushing back up again. I don't need this point here, we can have it here. Hey Jamil, how are you doing? Pips Apprentice was looking for you. Now pushing back up. Let me just check this trend line. I don't need this trend line here actually. Doesn't make sense, take that away. Now looking at this, pushing down, it is coming back to that 38.2 level. Even if I caught this shorter term move, we will see about, so you can see that confluence of levels there. If we just took the two different peaks, we see 38.2 and 50 there, and also that resistance level there. Okay, so 6775 seems to be a resistance level that we have to look at. 50 and 61.8 is right there. I would be looking if that dollar continues to weaken. 6790, stop loss 20 pips, take profit 75 or even 80 pips to the upside. It's why I'm hesitating a little bit right now is that although this trade seems to make sense on the technical basis, I don't see a big reason why we're going to see the Aussie dollar push up so strongly. I don't see it, for no big, apart from the ADP, no big news. I don't see why the Aussie dollar should push up 80 pips tonight. So I'm thinking, considering that we have, we're anticipating dollar weakness, we could see this push up. What if we saw that push back down? No. Okay, let's do that. Let's catch this level here. Catch this point here. So I got 50 pips, 20 to 50. I think I'll be happier with that. If it does push up to that 50 level, it looks like then you can continue pushing higher again. You drag that take profit higher and go for the full ride. Okay, so I'm happier with that. Okay, no, wait, I'll tell you what. We do it at 80. And then we would consider that point as a possible hesitation level. That would make a lot more sense. I want to clear this out a little bit. And also this one, just to highlight to you that confluence of levels there that we wanted to break at 6785 before we would look to buy it up. Dollar index is about to plummet. The recent surge looks more like correction. I agree entirely. Looking for that to push down. Yeah, that spike came back in again. That's weird. Right, so yeah, I agree entirely. Looks like it might push down a little bit today, and then maybe tomorrow we see that full move. But I don't see a big reason why we're going to see that big plummet today. Okay, overall, yes, going to plummet, but possibly not a big rush for it today. So Aussie dollar 6790, stop loss 20, take profit 80. Buy 0.67, what was it, 6790, 6790, stop loss 20, take profit 80. There is a possible hesitation at 6840, 0.6840. Okay, so you might want to get out there, but we could be looking for the full move up. 6790, stop loss 20, take profit 80. Okay, that makes sense. Jamil says he's on a buy for the pound dollar. Okay, we'll get to that shortly. I am happy with that. I'm actually getting more happy with the Aussie dollars. Okay, we'll have that set up there. Then on to the yen. Early this morning, so like at 7 a.m. I think someone on the Discord channel was going, hey, Jin, are you looking at the yen? What's your view of the yen? I was super, not super prime, but I was looking closely going, hey, could it break? Could it come down and get to that 142.80 level? And then I was looking to sell it down. It came very close, came down to about 142.86 and then bounced back up again. So now looking like it's pushing back down, I would maintain this view. Right, 142.80. Let me just double check this. You see that that's right at that 38.2 level. And it's right there. If we took this whole thing That'd be 23.6 right there. So I'm happy with that move. Right, if it comes down, breaks the resistance turned support level, 61.8 broken, so we can take that one away. Push up, comes down, breaks the level, 142.80. I would maintain that view. About there, stop loss 40, take profit 200 to the downside. I don't see why it will get to 200. I would say reasonably maybe 115 to the downside. Okay, I would have that. So if the dollar does push down, we're going to see the US yen push down as well. Then we're going to see that move, which would make sense. Goju says 120. Okay, so that makes sense. I'll keep that view. Could it bounce and continue back up again? Wouldn't be surprised, but I think a weakness on the dollar is going to lead that to the downside. Okay, so 142.80, 40 to 115. 142. We're looking to sell this down. 142.80, stop loss 40, take profit 115. I'm thinking whether it's worth considering a possible bounce. 143.40, stop loss 50, take profit 130. I don't see a big reason for it to push back up, but the yen does get into a bit of a trending scenario. No, I'm happy with that. So I was considering whether the yen could do that, bounce back up, right? So that's why we have that condition that it needs to break that support first before we'll get in 142.80 to sell down. Okay, I'm happy with that. Then on to the pound dollar. Did not break that support. I like that support. So this was something that we highlighted a lot yesterday. Support level held 14th of December, held again close on the 19th and again on the 21st. We saw it sitting there on the 2nd, 3rd, all the way, and it's bounced back up. So Jamil says it's on a pound dollar buy direction. I agree, but if you're trying to get in right now, might be a little bit late. I would be looking for it to break above that 1.27 level first, that dotted line there, before looking to buy it up. Okay, now if we did that, you'd see that maybe that point there. We have 38.2, right? It's coming right up to that 38.2 level. Needs to break above 1.27 before we could look to buy it up. There we go. Then I would be looking for, so if you got into the trade earlier, I think reasonably, I mean, if you're trading there, good, very good trade up. Now a bit too late. I want to see a reaction here at 1.27, breaking above 1.27. We can look to buy it up. So 1.2715, stop loss 25, take profit. Again, I would say 50. I don't see why it would get all the way up there. I would like to see it get all the way up there, but I think that it could come up to that point first. Right? Jamil has his take profit at 1.2730, which is just right after I get in. I would have gotten into that trade, so about there. Makes sense. I like that move, but I think that if we can get up to that point, we're likely to see it push a little bit higher on. So about up to that point there. Okay. So 1.2715, 25 to 55 on the pound dollar. Buy 1.2715, stop loss 25, take profit 55 to the upside. All good, all good. Again, if you can help me out, click that like and subscribe button as we go through the session. I'm happy with that. Yes, okay, good. Then onto the euro. I was hoping for that move down. It did not retrace. It just went straight down to the support. Did not break the support because we saw that dollar weakness come back into play. Now dragging this down, we can identify 23.6 at this point. That whole move down. 23.6 is approaching. I think that we would have a smaller trade, right? Again, this is right in the middle, or almost in the middle of that support and resistance level. It's right in the, almost in the middle of the support and resistance level. So it's not going to be the best place to get into a trade right now, right? On the euro dollar, not the best place to get into a trade right now. Look for it to break above that 23.6 retracement level. I would say even that point at 1.096360, that as a resistance level, it broke through. I don't like that it broke through so easily. I would change it to about that point. Let me just double check. 61.8 is right there. Yeah, I want to catch. I would think that the resistance will be a bit more at that point, at these areas here, nearer to that 61.8 level. Okay, so in that case, what I'm looking for, US Swiss franc ready for a sell. Okay, we'll get to that after this. We're getting there. Lost my train of thought. Okay, here we go. 1.0970. Take profit 70 pips. Stop loss 20 pips to the upside. We see it pushing up. If the US Swiss franc, we'll look at that short, well, it's coming down. If that does push down, continue to push lower, then there is a slightly inverse relationship between the US Swiss franc and the euro dollar. So we should see this push up as well, especially if the dollar index continues to push lower. Right, so we're looking at multiple pairs, balancing the relationship between each of it. Now that would make more sense. So 1.0970, stop loss 20, take profit 70 pips to the upside for the euro dollar. Buy 1.0970. Is it 0970? 0970, yes, 20 to 70. 0970, stop loss 20, take profit 70 pips to the upside. Right, remember guys, we're here now looking, and it's looking very bearish. Just the first 5 pairs that we looked at, we're looking at a very bearish view on the dollar. You know, looking to buy the Kiwi, the Aussie, the pound, the euro, looking to sell on the yen. Just be careful that you're not fully over biased on the dollar weakness scenario. It might bounce and push back up and test again before turning down. So just be a bit more patient. Not ready yet. Needs to break past that point before we confirm. We can somewhat confirm a weakness on the dollar. US Swiss franc. Premium level, Jamil, interesting. I'm trying to catch 15 to 20 pips and then out. Which one are you talking about, Pips Apprentice? With the Swiss pushing down, so that's working out well from what we talked about yesterday. Yep, that's working out well from what we talked about yesterday. I do think it's going to continue to the downside towards our take profit level of 61 or 60 pips to the downside. Okay, so if you did get onto that trade, selling down from 8515, 30 pip stop, 60 pip take, good job, let me know, put it into the chat. Anyone else selling on the Swiss, let me know. With that, what you would also see, Panos is asking about the pound dollar. I'll come back to that shortly. Give me a minute. What you would also see on the US Swiss franc is a little bit of that shoulder, head and shoulder pattern. Oops, didn't close it up. Shoulder pattern with a neckline at about that point. Right, see the head and shoulder pattern there. So now that it's breaking, I would say that, hey, it looks like we might see that push down, and that's why we think that you might see that push down. We're seeing that momentum come lower. If you haven't got into that trade, then I would say wait for the hour to close. Wait for the hour to close. You could be looking to sell down below 8470. 8470. Stop loss again about 40 pips to be safe. And take profit could go down to a whole 100 pips to the downside. Looking at all the pairs, it really looks like we're setting up for the dollar weakness scenario. So I'm looking to that. Moss took a loss on the Aussie. I think it came down about 20 pips and then it shot up. But in profit from sell on US Swiss franc and sell since last night. Very good. I think hope I'm not jinxing it, but I could get to that 60 pip take profit level. So if you haven't already, looking at the head and shoulder pattern, 8470, 40 pip to 100 pips to the downside on the Swiss. I like how the dollar is moving right now. Love it. 8470, 30 to 100. Is it 30? 40 to 100. Let's change that. 40 to 100, and we actually I see a bit of a head and shoulder on pattern on that. That's Jamil's take profit level. Fantastic. I like it when we're in confluence. All right. If you have any trades, if you're getting into any trades, put it into the chat. Let me know. Let's see whether we're in confluence on those analysis as well. Okay. So Panos was asking about the pound dollar. Pound dollar now pushing to the upside. Needs to break above 38.2. 1.27 is right there. So it's coming close to that fib retracement level. Needs to break the round number level at 1.27. I would be looking to buy it up from 1.2715. 55 pip move to the upside. 25 pip stop loss. All right. Panos, let me know if that's all good. It could very well go higher. It could very well go higher to that 100 pip move. But what I would be saying is, or what I would be thinking is that get into that trade. If it pushes up towards 55, move that stop loss to break even, right? Or I can't do it on the chart, but secure some profit first. And then after that, move that take profit up to 100 pips. You could ride that move up, depending on the momentum, depending on how price is moving. Okay, fantastic. Thanks for joining us, Panos, and anyone else on LinkedIn who's joining us. The link, I'll put in the I don't think I can post it in, but I'll put in the link for the Discord channel. Do join us on Discord as well. Then US Swiss franc is done, looking very nice. CAD shot up. So we looked at that consolidation, broke out of that, pushed up about 30 pips before tracking back down. Okay, before tracking back down. Now, if you haven't closed off that trade, it's heading towards your stop loss. If you have, then might have got off that trade at 30. I know a lot of people get out about 20, 30 pips. So you would have got off that trade as well. Dollar weakness is going to lead to the downside on the US CAD, on the loonie. So we're looking at that continuation back down, right? We see a very similar level here. Tested, came back down, broke that resistance, now turned support, now turned support level. And we saw that big move to the downside. So am I thinking something like that could happen? Maybe. I'm wishing for that to happen. You see it's breaking that 23.6 level. And if it does break that support level as well, we could see it head down towards 61.8. So relatively straightforward. You would be looking at 1.3310. No, a bit lower. 1.3305. Stop loss 20 pips. Take profit 46 or even 50 pips to the downside. Right? Towards that 61.8 and that support level there. Okay, so 1.3305. There we go. So again, you know, it concerns me that all our setups right now is looking at dollar weakness scenarios. So wait, let me type that up. I can't type and talk at the same time. Let me do that first. 20, take profit, 50. Okay, there we go. Yeah, it concerns me that we're looking at all our setups being dollar weakness scenarios. It's good to have that setup there to, you know what you're looking for, but you also don't want to be over committed. Sometimes, you know, when with a setup, you're going to be trading what you think rather than what happens or is actually happening. So we still want to see that break and push down before you start looking at the dollar weakness scenarios, right? It could very well come down to this area and bounce back up. So just be super careful for now. Okay. All right, Jamil, take care. We'll catch you again. You're most welcome, Jamil. Appreciate that. So US CAD makes sense to the downside. And on to gold. Gold, yesterday we were saying that reaction to support below 2058 could trade down to 2047. It did even more than that. It went from 2058 down to 2047, all the way down to 2032, and then bounce back up. All right, so that level there made some sense as well. But now that is bouncing back up. Remember, we're looking at that dollar weakness scenario. All right, so if I catch that move there, or that top to that point, highlighting some levels, 38.2, 23.6 broke, 38.2 is close. I would take that one away for now, just to clear up the charts a little bit. We can see 61.8 right there. Needs to break above. This trend line is broken. No point having that, so take that away. Breaking above this support turned resistance level. We want to see it go past this. I'm tempted to think of this as a resistance and for this to trade up to that point. Yep. Okay. So it needs to go past 2050. 2051. I want the candle to close above 2051. Then we could see it get to 2065. Right? Needs to go past 2050. 2050 will be a bit of an aggressive entry. 2051 will make a bit more sense. Then we could see it get from that point up towards 2065. Okay, there we go. So again, because of that dollar weakness, it's not ready now. There's another 10 minutes for the candle to close. We want to see what happens at this point, right? But on gold, we're looking for it to be above 2051, could trade up to 2065. You can see it retracing a little bit right now. Coming back into the Bollinger, that's fine. Needs to break past this point lower. I'll still maintain that view, but you want to see what happens. It's crucial to see what happens at this 23.6 level. Okay. Surprisingly, I've gone through my charts and analysis a lot faster today. I want to share with you that as well. So we did see Bitcoin. This is on hourly chart, right? It's on the 2nd of Jan. It rose up strongly, went up almost towards 46,000, just shy of 46,000, and overnight, yesterday, started crashing back down because of talks, possibly rumors, possibly news that the SEC was going to reject the Bitcoin ETF, right? So this whole massive climb, not this one, but the recent big move on Bitcoin to the upside was because of anticipation that SEC was going to adopt the Bitcoin ETF or approve the ETF. Then overnight, some rumors about, let me see if I can bring that up. Yeah, it takes a major hit from uptrend, and here's why. Where was it? Okay, I don't have the news headliner there. But yeah, because of a talk that the ETF might be rejected, it went straight. Within the 2-hour candle, it went from 45,150 straight down towards 41,000, almost 41,466. Retrace back up, and then now looking like it might renew another move to the downside. I'll show you the Bollinger, and that's why we see that retrace. So that drop, push back up, now looking like another continuation to the downside. Okay, so for those of you, if you're holding on to Bitcoin, it is going to be a rocky ride, but long-term view, maintain a long-term view on this. I think that we're still looking at the upside potential, but for now, going to be choppy, going to be a choppy ride. Okay. So with that said, hey, Monsieur Delaros, how are you doing? Happy New Year. Dollar index is bouncing slightly at 23.6. We want to see what happens there. Okay, so if you haven't already, as it breaks is asking about Aussie yen. Let's look at Aussie yen. Aussie yen, okay, look at the Aussie first. Aussie looking like it should be pushing to the upside, but you see it now holding back a little bit because we see the dollar index bouncing. If that does push up, and the yen, which would lead the yen to push down because of that dollar weakness, then on the Aussie yen, you're going to see a bit of a choppy move, right? Because Aussie dollar pushing up, should see that go up, but yen pushing down, You see that coming down. The question was, do I see another push to the upside? Let me just clear out those lines first. At this point, we have a level there. We have a resistance there. And another one, the support is down here. Could it push to the upside? I think it's going to, what is likely to do on the Aussie yen is a bit of a retrace first before pushing back up. Right? I don't think it's going to sit there or go from here. I think it's going to retrace a little bit more. Maybe down to that 96.60 level before pushing back up. Yes, so I do think there's another push to the upside, but maybe a retrace first before that push up. All right, as it breaks, hope that answers your question on the Aussie yen. And Taro Bars asked about gold. Did gold as well. So just a quick recap on gold is that it's sitting right at the resistance level of 2047. Needs to push up, well, needs dollar index to push down. Then we're going to see that inverse relationship come back into play, pushing gold past 38.2 retracement level. So looking at a bit of a confirmation at 2050 to push up towards that 2065 resistance level. Okay? Makes sense, makes sense. Let me know. Any further questions? Put it into the chat. Let me know. Moss is asking about Swiss yen. Worked out well. Yeah, Swiss yen worked out very well. I can't remember who was Moss. Were you the one asking about Swiss yen? Not a pair I typically look at, but hey, Swiss yen worked out very well. 104, almost 140 pip move to the upside based on our setup, getting in at 167.90, stop loss 40, take profit 140, almost 140 to the upside. Worked out very well. Anyone got into that trade? Let me know. Can we check oil? I haven't done oil for a long time. So Brent is sitting at 78.69, meeting a bit of a resistance there. I tend not to look too much at oil because there are many other factors that are contributing to that price volatility. Let me see what other news are there. Oil extend gains on Middle East supply worries. We're still talking about supply worries. Brent climbs higher on supply disruption fears. Based on that, if it breaks above that resistance, then we could see it come towards the next resistance at 81.34. So it needs to break above that point to push up. Hesitating there. If it does push down, you might get a bit of a double top formation. But it comes down to whether the rumors of a supply crunch is going to play out to push price higher. So watch that resistance level at 78.92 or even round it up to 79. If it breaks past that point, then we're going to see the upside push. All right. And Lucky Last, Buba is asking about the pound yen. I think we spoke about the pound yen yesterday, did we? Yeah, it was at that point we thought. Right in the middle of the support and resistance level. Looking like, look, we talked about the pound dollar pushing up. It's on the way there. And again, yen looks like it's pushing down slightly. I think that we are possibly going to see the pound dollar push up. I'll clear out these lines. let's look at this again. That's a good resistance level. In fact, that's a good resistance level. And then that's a major resistance there. We know that for sure it's a good support or swing low. So what I would be looking for here is a break above 182.33. I would say even 182.50. Take profit a good 145 pips up, stop loss maybe 40 pips. Very good risk to reward there on the pound yen to the upside. Okay, hope I answered your question there, Buba. And Moss did a 1-to-1 on the Swiss yen. Very good job. Well done there. All right. So with that said, and I'm super happy a couple of you did jump onto a couple of trades, made good profits there. Please remember, trade well, trade safe. The link for the Discord channel is going to be there again for you guys. If you haven't already, do make sure you join. Tomorrow is non-farm Friday. We'll talk about that tomorrow during our session. I look forward to seeing you on Discord, and if not, I'll see you on the session tomorrow. Same time, same place. Take care now. Bye-bye.